What's up, everybody? It's your boy Deonte Burden, aka Mr. Short Dollar himself. I want to come give you guys a quick tutorial in regards to the income statement, also known as the profit and loss statement. We get a lot of questions about this, and we've done previous videos about it, but I just want to, rehash it again because a lot of people have questions regarding the income statement or the profit and loss from dealings that they may have from a financial reporting standpoint, or maybe with the profit and loss dealing with a Schedule C when they're filing a tax return, just say if you're a self-employed individual. Again, right here, the income statement, profit and loss, they are the same thing, guys. A couple quick things to know about it. And the first thing is that it lists the actual revenue and expenses for a particular business over a certain period of time. What I mean by period of time, when this reporting form comes out, it can be over a month, a week, quarter, or a year. Customarily, you usually get an income statement reported maybe on a monthly basis or a yearly basis. Okay, if you're doing any kind of financial analytics or anything like that, they may break it down a little bit more where they're looking at it from a quarterly basis. They may be looking at it over every 2 or 3 months. But standardly, you will see people, they may be looking at the actual profit loss income statement on a monthly or a yearly basis, right? And this right here, the one we have in this example, this is for the one that ended in 2022. So this is all the annual revenue for 2000, annual revenue and expenses for the whole year of 2022. Okay, now when you look at, you got different sections of the income statement or the profit loss statement, and we're looking at these right now. You have 4 different sections where get these for you got 4 different sections, one being revenue, another one being cost of goods sold, another one being expenses, another section being other income with it overlies go down to the net income or loss, right? Net income or loss being if it's a positive number, that means the company made money. If it's a negative number, that means the company had a loss. Okay, so let's go break down these different sections, right? First being revenue. Revenue is the actual money that came in from sales, right? Sales may be you actually selling an item or you providing a service, whatever. That's what the actual gross sales is. I'm sorry, that's been truncated somehow. Don't know how, but apologize on that. But it is gross sales, right? You see this part that says less sales returns and allowances. Those are just refunds or any returned items that came out because again, maybe because of defects, maybe people returned them. But this will be a subtraction to that number, and it will go back to that net sales number. But that's all less sales and returns and allowances. And what I want to empower anyone is if you're in business, you actually have to read one of these, you actually know exactly what it is. So it's, it has you won't necessarily have the actual probably knowledge of somebody like me to be an accountant, but you have some kind of familiarity of it is in exactly knowing exactly what is given to you and what things to look for in your particular business. Okay. So that's pretty much your net sales, the actual money that you had coming in. The next section, cost of goods sold. Cost of goods sold is pretty much you're gonna subtract the actual cost that you had associated with providing the product. Typically, if you're in a service business, you wouldn't really necessarily have cost of goods sold because you're providing a service. So just say if you're actually, doing any kind of electrical, plumbing, janitorial, even accounting, you don't necessarily have cost of goods sold. This is typically for people in manufacturing production. So if you're making jewelry, you're making bicycles, you're building things, you have some kind of where you're producing an actual product to sell. This is where you'll be using this cost of goods sold. And it's broken down in beginning inventory and ending inventory, right? So you see the different sections where it says beginning inventory, $23,812.66. That's what the actual cost of the inventory that you had at the beginning of the year. And when you look at adding these different things that may have came through the year, purchases that may have been other materials or products parts that you had bought, direct labor, that meaning people that were actually not necessarily working for the company, but directly attributed to actually producing the product. An example is just say this is a bike company. If it's a bike company, it may be just like you may have hired a specific welder in to connect the different pipes in. He's not necessarily an employee for it, but it's direct labor for that particular product getting produced. And indirect expenses may be expenses not necessarily per, purchase more so for it. The product, maybe you may have paid for certain shipping or insurance pieces that had to be covered in actual manufacturing or producing of the product. So that's what we have right there. You see, we don't have anything there, so we're still stuck with the beginning inventory number. Any less any inventory, just say if you sold any products, anything like that, you have that right here, and that's your end cost of goods sold number right there. So we didn't make anything, we didn't lose anything. You got the same thing we had at the beginning of the year. What happens? You subtract the cost of goods sold number from that net sales number, and it gives a gross profit or loss. Okay, gross profit or loss. From that point, then we go to the expenses section. And these are the actual items that you spent to make the actual company go forward, right? These are the actual things that you had to spend for the company to run. Examples being utilities, refunds, Amazon seller fees, supplies, marketing, logistics, those particular things. These are actual the things that had to be spent to run the company, right? These are expenses, things that you actually use. These, and this one key thing, one difference is not listed on here if you want to see the expenditures. The expenditures are actual one-time purchases of certain things to be that a company doesn't necessarily make. That might be a major piece of equipment or something like that. With doing it, where you want to pull those particular out. Expenses are actually things that are actually being used. So that's what we have these expenses here. And that totaling up to $22,933.99. Once you subtract that gross profit from the total expenses, that's when we get our net operating income. Okay. From that point, we can go to this other income section, right? And this typically where you may break down some any kind of interest income. And this is actually where you're not necessarily things that you earned for the business, but these may be indirect things that happen. Where you say gain or sale of an asset, and where gain or sale of an asset may come into play. Just say if you did own some equipment, you bought it for $5,000, you sold it for $7,000, you would put that $2,000 profit right here. Interest income, if you have like a savings account and brokerage account, you may put that right here, and that's just your other income. You would add that to that bottom line number. We didn't have any. And right here at the bottom, we have our net income or loss, which is real our net income, $7,692.82. I'm sorry. But that's pretty much how you get the whole breakdown of your income statement. It's pretty simple. What I would challenge everyone to do if you don't, deal with these on a day-to-day basis is get your bookkeeper. If you're not doing it yourself, get your bookkeeper to draft them and spend some time looking at it. And what you can find out with your analytics of actually looking at your income statement on a monthly and quarterly basis. Check for trends. Look at the previous year. What were you doing? What were you spending? What you weren't spending? How can you trim out the fat? Because at the end of the day, the numbers are the numbers. You can look at these and find out, what do we really need? Do we need to be spending this much money in supplies? Do we need to increase marketing if we spend more money in marketing and less money in, let's say, utilities, would that make this number increase? This is what we can kind of look at it. You can just say, if we spend a little bit more, just say no advertising listed or whatever, can we increase our sales with doing that? Looking at new vendors, we're paying $500 in utilities, man. Maybe we go to a different particular company, we can reduce that. That's why you want to have this data in front of you, so you're not assuming, right? The numbers are here in front of you. And it's very, very important that all business owners take time to actually analyze these at least on a monthly basis, okay? But again, most of the time you're actually going to get, called to report this to a lender or your tax return. You want to know, because at the end of the day, it's one thing to submit it. It's another thing not even know exactly what you gave someone. So it behooves you to actually become familiar with these particular forms. Most of the time, if you have your bookkeeper using any kind of accounting software like QuickBooks or something like that, they'll take the data that you input into it and generate the reports for you. It's just, again, it's one thing to have the reports, it's another thing to understand what they are. So listen, I hope you guys, enjoyed the tutorial that I gave you in regards to the income statement or profit and loss statement. Take advantage of more great information just like this. Hit that $ in the bottom right-hand corner to subscribe to the channel, and also hit the bell to get a notification each time we upload a new video. That's it with that tutorial. We also have other videos in regards. I'm going to make some new ones in regards to the balance sheet or the cash flow statement. Those the basic, the income statement, the balance sheet, and the cash flow statement are the basic financial reporting forms or statements that most businesses be used and need to be familiar with. And I have videos for them already on Mr. Short Dollar. But again, they were done like from the whiteboard, and I'll probably do another one on the form in a bigger fashion, closer fashion, like it is right now for you guys. So listen, if you got any question, anything like that, make sure you put them in the comment section below. Again, subscribe to the channel. Take care, guys, and I'll talk with you soon.